welcome to TCF 2022 in London. I'm Hannah Wallace, and kindly joining me now in the studio to discuss financial crime mitigation and sanctions is Adam Gable from Temenos. Adam, thank you very much for taking the time to speak with us.
Thank you, Hannah. Nice to be here. Nice to be back at TCF in person.
That's right.
And greeting people in my hometown, which is quite nice and unusual for me.
Likewise, good to have you on. So this is a really interesting topic, financial crime mitigation and sanctions. It's really at the forefront of our minds, and indeed the headlines with the current geopolitical crises going on around us. So what impact do you think this is having on those banks that are trying to protect themselves, their customers, and indeed the financial system as a whole? What kind of burdens are there?
Yeah. You're right, this really does bring financial crime mitigation to the spotlight. You know, it's in the headlines right now. And, you know, sanction lists change all the time, and banks have to manage that and calibrate in accordance with that. Mm-hmm. The difference here is that there's a big sanction program that's come online all at once, and this creates burdens and does make banks and our customers concerned. First concern is you know, the biggest fines we've seen for non-compliance are around sanction breaches. So this makes them nervous, they're incumbent on complying, and they need to make sure that they don't breach any of these sanctions that are out there. The other thing is kind of the operational impact. Every bank is trying to manage the cost of compliance, trying to be as lean as possible. What happens when a new sanctions program comes online is there's always a new set of false positives that get generated with these new names. Banks need to calibrate those very quickly. This often means they need bigger teams, even if that's elastic while they kind of implement the bulk of the program. And also, actually, there's a bit of a dearth of people that have skills in this area right now, so that creates problems for them. Mm-hmm. The other thing is, you know, I guess accelerated by COVID, there's so many financial services being delivered online now, not just challenger banks, incumbent banks. And in line with that, banks are making big promises about customer experience. You know, great products, great customer experience. This means all those financial crime checks and sanction checks need to happen without compromising that experience. So it needs to be fast, it needs to be accurate. So absolutely, you know, this is sharpening the focus of our clients and you know, potential clients that we speak to.
All right, so you've done a good job to highlight the challenges there. Thanks for setting the scene. And now regulators have recently flagged up some concerns around compliance failings amongst some of those challenger banks. So with that in mind, do you think they have the necessary capabilities and also experience to meet those concerns? And would you say they're doing enough?
Yeah, it's a great question. I guess you're alluding to the FCA report a couple of weeks ago. The FCA did a study, I think 5 challenger banks, digital challenger banks. And what they found from that is that there were some weaknesses around AML controls, weaknesses around the number of suspicious activity reports being filed, weaknesses around the due diligence data that's being collected. And the overarching message from the FCA was that challenger banks should not be compromising robust financial crime controls for great customer experience, or customer experience, let's say that. And listen, for me, this comes off the back of a string of kind of headline events around this subject. And we know that right now, you know, brand is all important particularly when you're banking online, you're looking at that brand. Yeah. So those headline events, negative news events, they have an impact, you know, so it does make banks nervous. I think from a challenger bank perspective, there's kind of two sides to it. In one respect, they're well positioned to take, you know, modern API-first technology, cloud-based. They're well positioned because they're lean. They don't have that kind of legacy systems to plumb into. Yeah. But on the other hand, you know, they don't have the maturity of compliance staff generally, and you know, I need to generalize here, generally don't have that maturity of compliance teams that have been doing this for a long time, where they've reached a point of maturity. So what they end up doing is really just calibrating the norm, adapting to regulation as it changes. The challenger banks, you know, they're ramping up in terms of volume and customers quickly, and at the same time, you know, they're struggling a bit to have the maturity in their teams to implement their risk-based approach, you know, their risk appetite, those kind of things. just finish on that because this is where I think technology is an enabler.
And yes, that's where Temenos comes in. What are you doing around the adoption of financial crime mitigation capabilities?
So today we launched our composable banking on the Temenos Banking Cloud. From a financial crime perspective, that's really what we've been focusing on over the last 12 months, is delivering pre-composed financial crime mitigation capability. We've got 5 services we're launching. They cover customer screening, transaction screening, AML, payment fraud mitigation and KYC. Banks can take one or all of those. They come pre-wired to Temenos products, so with a well-defined and well-described set of APIs, so banks can plumb into them very quickly and easily. Just going back to what we were just talking about around the challenges and kind of what they need, and the fact that maybe they don't have the maturity or the depths of skills in their teams. They definitely have the compliance people. They definitely know the law and how to apply it. What they might not have is the hybrid people that understand the systems deeply and are able to implement the rules in a product.
Sure.
So one of the things we've been focusing on is really building a template of rules for faster compliance and time to market. But with the adaptability that we know our customers need, given changes in regulation, given the differences in risk appetite. So that's really one of the things we've been focusing on. And doing that through the Temenos Banking Cloud, there's all those other benefits that come with the kind of self-service. Banks can explore, provision, and consume very quickly these services, really for that faster time to value.
Brilliant. Well, this is a really interesting topic, as I said, and you've gone into some good detail there, and looking forward to catching up further down the line and hearing more about what Temenos is working on in this space. But we'll leave it there for now and let you get back to the event. Adam, thank you very much.
Great. Thanks for having me. Cheers.